Hello, good morning, everyone, and welcome to our morning market update for Friday, December the 29th. OMG, it's the end of the year. Can't believe it. 2017 has flown by way too quickly, and I don't appreciate it one bit. All right, in today's morning update, we're going to talk about how to trade the last day of the year. We're going to have a look at the markets overnight and how they performed and where the opportunities are going to be. Plus, we're going to talk about a few things you need to know trading today and where volatility is going to be, how it's going to move, and what the likelihood is for this market to perform in 20. So let me just check the audio. I apologize. I got this weird feeling that this audio is not working. No, yeah, it's working. There we go. Double check. I want to make sure I'm not talking. The audio's not working. All right, guys. So in Asia, Japan's down 0.1% today. Hong Kong's up 0.2. China's up 0.3 of a percentage point, and India's up 0.6 as well. Thank you, Donna. In Europe, at midday, London's up 0.4%. Paris is down 0.2. Frankfurt's down 0.3% as well. And futures here in the United States, Dow Jones is up 0.3. S&P is also up 0.3%. Nasdaq's up 0.3%, and crude oil is up almost half a percentage point above 60. So we've broken above 60 on crude, and we've almost touched the second resistance level calculated off the daily pivot. So that's good. Strong rally in crude oil markets. Gold price continues to rip as well, above $1,300 for the first time in a while. Bitcoin is down 1.1%, and 10-year treasury yields are pretty flat here into the last day of the new year. Today's economic calendar is pretty lonely. At 1 p.m. Eastern, we have the Baker Hughes rig count, and we have nothing else this morning that's of significance. So that puts us on position to be trading for the very last day of the new year on no economic news or no major releases. That's going to create some opportunity for us as traders. I'm going to talk to you about how to trade this. First, let me talk about the holiday hours coming up in the next couple of days. So markets are closed on Monday, January the 1st for observance of New Year. So most people are going to be hungover and need the time to recover. I don't know why it's only one day, because sometimes when you party, you need more than one day to recover. When I worked in the corporate place, I remember seeing people recovering until the Friday of the week. All right, so markets are closed on Monday. So are we. We're going to be open limited hours. If you send some email tickets that are urgent, we'll pitch in and help on that day. But for the most part, we'll be closed. We won't have our morning market update, obviously, on Monday because the market's closed. There's nothing to update you on. But that day, we will have a YouTube around 1 p.m. Of something exciting. So watch out for that. And we're going to be back to our regular schedule on Tuesday, January 2nd, with our morning market update and morning live trading room. So on Monday, everything's canceled. The daily newsletter is canceled for subscribers. The day trading room in the morning is also canceled in observance of the holiday. But we will still send out our weekly trading ideas newsletter on Sunday. All right. So that's still up and going. All right. So it's the last trading day of the year, and investors are reflecting back on 2017. So let's take a quick journey through what's happened in 2017. And this isn't even like, this is just a major events. If you put down some more medium kind of impact events, the list gets much longer. But let's go through this and look at it. All right, Brexit negotiations started. We had the Catalonia crisis with Spain as well. All right, we had the unraveling of the Dodd-Frank Act. We had the tax overhaul that went up and down. That had a lot of phases. It's going to pass. It's not going to pass, and the market got excited on that. All right. We had the U.S. economic boom. We had a lot of strong GDP numbers, but inflation still remains weak, and stock indices trade to record highs. We had one heck of a bullish year this year, and it was a massive run up that very few analysts, traders, anyone expected. That's why I always say stop trying to be right and be profitable. Stop expecting and anticipating things and just start doing what you're seeing. All right, start trading the now, not the future. Trade the present. All right, forget the future. Trade the present, and you'll do fantastic. All right, we had the crypto mania. Cryptocurrencies absolutely explode. We had the net neutrality repeal most recently. We had the OPEC output production cut extension. We had the Paris and Iran deal pullout. GE, General Electric, had a massive restructure this year. North Korea and United States are on the brink of potential war. Now we get news that China's testing an interballistic missile that will be non-detectable by THAAD missile defense systems. All right, we have news that Russia just tested a rocket as well that hovers 500 feet above the air, so it's undetectable by radar. So these countries doing these tests, this is all started as it was triggered by the fact The North Korea and the United States are going back and forth. Russia and China are right there with North Korea. They're pretty close, right? In fact, Russia shares a border with them. So does China. China's still doing illegal trade with North Korea with oil, with some reports being shown this morning. They denied it. Satellite images show the two ships side by side delivering oil to North Korean vessels. So this thing's only getting started. It's only intensifying, but that all started here this year. Europe's war on tax avoidance, the new Fed leadership that's coming out. So there's a lot of stuff that happened in 2017. It was a very eventful year. And as we get ready to wrap up this year, I'm going to reflect and say this. It's been one heck of a year to be a day trader. You've had the best opportunity you've had in a long time to day trade. Markets don't get any better than this. Sure, they come out with some more volatility sometimes. There's more downside. But the absence of the downside means that it was just very easy to find the long trade. Just wait for a dip and get long. It was very easy and predictable to trade 2017. I don't think 2018 is going to be that easy. I think your work's cut out a little bit more for you. So they always say, there's a saying in the industry, it says, don't confuse bulls for brains. All right. And what that means is just because you're making money in an up market, don't confuse that for being a genius investor. I'm so smart. I'm a great investor. Because when you're in an up market, you're supposed to be making money. The goal becomes in the long term to protect your profit on the downside and even profit in a down market. And for people who haven't been investing long enough to know what that's like, I would say this. If you're going into the end of this year being green and you had a lot of profits, sell some and take some profit. That's my only advice, is sell and take profit. I'm not here to scare you guys. I'm not saying anything. I would say 2018 ain't going to be as easy to trade. All right, it's kind of like the Titanic where they're not sailing, they're in the sea, motoring along, and the captain says, ice bag, straight ahead. That's kind of how I'm seeing 2018. All right, last day of the year, it could get volatile. Here's a few effects that you need to observe, okay? But the trend is up in equities, and I think today we're going to get nachos, all right? What nachos means is nachos and cheese. Nachos means new highs on the close. And if you read that in one shot, nacho, you get nachos. I think we're getting new highs on the close. I think we're going to press the S&P 500 into a new high, and we're going to close on a high tick on a new high at 4:15 p.m. today. And that's what I'm looking at. All right. Actually, at 4 p.m., 4:15 is a cash close for 15 minutes, and then we roll back around at 5. But what I'm saying is, look out. Today could be a bullish day. There could be some profit taking from the institutional space. But more importantly, let's pretend you're a portfolio manager. You'll answer your own question. I won't even have to tell you. This is genius. Let's say you're a portfolio manager. You got some cash on the book, and you got about $1 billion position in equities. All right, notional value. And you say, you know what? This market's thin because of holidays. There's not a lot of volume. What if I take some of that $2-3 million that I have sitting around in cash and I plow it long into the S&P 500 futures? What would happen? Well, you would eat up all the selling and you would push the market up, right? So what happens is by becoming such an aggressive buyer, you're going to squeeze some of the short sellers out of their positions. You're also going to soak up all the selling and push markets higher. So what you're doing with your cash position is you're high closing your portfolio. Let's say your portfolio is worth $1 billion. You get a percentage point pop. Now it's worth 1.1. All right, it goes up a lot. It's not 10%, but if you can make $50 million on a book by using $2 million of cash flow to just soak up all the selling liquidity, you're going to do it. And that's a great move for you in your portfolio, because you go to your investors and say 2017 was one hell of a year. We closed it out on a bang. On the last day, we even made 1% for the portfolio. All right, so that's why I'm looking for institutional volume today to just get crazy and start eating up all the sell side. You're going to squeeze out shorts today, I think. This is my prognosis going the last day here. Shorts are going to get squeezed out. They're going to get their head in a vice grip, get squeezed, get pushed to highs. We're going to close on those highs. How we get there is a whole different thing. We'll talk about that in the trading room, what that ascent looks like into the close. We'll be trading it today. I think we got to pull back this morning. Okay, so slight dip on the S&P 500 futures. European close, we're going to balance out, and then in the afternoon from 2 to 4 p.m., that's where you're going to get that pop today. Watch for institutional buying, especially from 3 to 4 p.m. Eastern. All right, that's going to be a really bullish window and time frame. Get out of the way. Don't be shorting that. In fact, buy a few contracts and give it a shot into the close. All right, but with that, I want to say be careful. It's going to close. It will potentially close on all-time highs, but it doesn't mean that you have to lose your shirt trying to get there. If we get a 30-point drop today, whatever. Nothing's discounted in this market, right? Nothing is impossible. You just trade it. If I get a 30-point drop today, I'll be happy to be wrong about the high close, and I'll ride the heck out of that down move. All right? That's the beauty of being a trader. You don't have to be right. You have to be profitable. Okay? I put zero currency, zero value on being right in this business, and all the value in being profitable. All right, so with that, I want to tell you guys, it's been a really exciting 2017. I want to take a moment to thank you for being here, being part of our channel, our morning updates. You guys have helped us grow exponentially. We're really happy to see what 2018 brings in store for us. We have massive plans, and you guys are going to be there for it all right? So thank you so much. I really appreciate you and appreciate your support and where we're going and where we're headed. We got a lot to come your way. I hope you stick around. 2018 is going to be a big, big year. On Monday, January 1st, I'm going to post a really fun video. You guys should check it out around 1 p.m. Eastern is what I'm shooting for. It's going to be all about New Year's resolutions and reviewing 2017. And I'm going to get personal with this. I'm going to open up to you guys. All right, so that's what I got for you. Enjoy this holiday with you and your families. Please be safe out there. If you're going out to party, don't drive. All right, I'm going to start, what is it, TAD? Traders Against Drinking and Driving. I'm starting the TAD right now. All right, be careful, guys. Honestly, all the best with you and your families. Be careful, be safe, but enjoy and celebrate. And what I'm going to give you guys a goal for the New Year is this. This New Year's Eve, do not celebrate your new ideas that you're going to make. All right, the last thing you want to have is resolutions. Resolutions don't work. Unless your last New Year's resolutions work, this New Year's resolution is not going to work. Not to rain on your parade, but here's how you do it. Everybody always wants to plan for more and more and more. This New Year, I'm going to challenge you guys to just appreciate what you already have. Don't celebrate the start of a new year. Celebrate the end of the old one that was really good. That mindset change will trigger a lot of things for you. I promise you. All right, guys, I'm past my time. Take care. All the best to you and your families. Celebrate safely. I'll see you guys. This is going to be cheesy. See you next year. That's our next morning market update that's live. It's Tuesday, January 2nd. I officially became one of those guys. Okay, take care, guys. All the best. Patented chair spin, the last one for the year in 3, 2, 1. See you next year on 9 a.m. on January 2nd for next morning market update. Take care and goodbye. All right, trade pros, let's kick butt. I'm ready to get some more money for the year. I'm not done yet. Let me just shut off the YouTube update and let's get right into it.